All right, let's jump right in. Today, we're going to build the complete investment case for, well, one of the most dominant companies on the planet, Microsoft. We'll break down how it's doing, where it's headed, and most importantly, what that all means for you as an investor. So, to really wrap your head around the scale we're talking about here, just look at this number, $2.7 trillion. At that market cap, Microsoft isn't just some tech company. It's a foundational pillar of the entire global economy. That number? It's the result of decades of innovation and building an ecosystem that, let's be honest, touches billions of our lives every single day. Okay, so here's the game plan for today. First, we're going to look at Microsoft's financial strength right now. The foundation of the whole thing. Then we'll dive into the two big engines that are going to drive its future growth. After that, we'll see how they're actually rewarding shareholders. And finally, we'll get into the nitty-gritty, the price, the risks, and the final verdict. All right, first up, let's dig into the bedrock of this whole thesis, the company's absolutely incredible financial performance and just how stable it is right now. Okay, now this is where the story gets really interesting. I mean, these aren't just numbers on a page. They show some serious, powerful growth across the board. Think about it, a 17% jump in revenue to over $81 billion in just one quarter. For a company this massive, that's just stunning. But here's the real kicker. Look at that cloud revenue, up 26%. That's the engine pulling this whole train forward. And it tells you everything you need to know about where business is heading. And hey, if you want a sneak peek into the future, this is it right here. $625 billion. That's Microsoft's commercial backlog. So what does that mean? Basically, it's like a fortress of guaranteed revenue. It's money that customers have already promised to spend. Having a backlog that huge, wow, it gives them this incredible visibility and a ton of confidence that the growth is going to keep on coming. So the big question is, where's all that future growth going to come from? Well, for Microsoft, the answer is crystal clear. It's all about two massive, interconnected trends that are basically defining our future: the cloud and AI. And check this out. This chart shows you that first engine in action. We're looking at the growth of their cloud platform, Azure. See that? It jumped from 28% growth to 39%. That's not just growth, people. That's acceleration. It's speeding up. And it makes perfect sense, right? Every big company is moving to the cloud, and Azure is just gobbling up a huge piece of that pie. Okay, on to the second engine, AI, of course. And this chart, wow, it just shows you how deep Microsoft's roots already are in this space. A staggering 85% of the Fortune 500 are already using Microsoft's AI. This isn't some far-off dream they're selling. Nope. It is happening right now with tools like Copilot getting scooped up by the world's biggest companies to get more done. So how in the world did they get so dominant so fast? Well, here's their secret sauce. They control the entire AI stack, from top to bottom. I'm talking about their own global data centers, their own custom-made AI chips, right through their huge partnership with OpenAI for the brains of the operation, and all the way to the apps like Copilot that you and I can actually use. That complete control, it's their superpower. It's a competitive advantage that is just so hard for anyone else to copy. All right, so we've seen the tech, we've seen the growth, but what does it all mean for your wallet? Let's talk about how all the success actually translates into real returns for shareholders. Now, if you're an investor who loves getting paid, this is a beautiful sight. Microsoft has this incredible, rock-solid track record of rewarding its shareholders. We're talking 23 straight years of dividend hikes. And these aren't tiny little bumps either. We're looking at about 10% growth per year for the last 5 years. That tells you everything about how confident the leadership is about the cash just rolling in. But here's the thing. It's not just about the growth of the dividend, it's about how safe it is. I mean, it's growing fast, sure, but it's also super sustainable. Their payout ratio is only around 22%. So to put that simply, they're only using about a fifth of their profits to pay you. What do they do with the rest? Well, they've got this huge pile of cash left over to pour back into the business, like building those AI data centers and to buy back their own stock, which is another great way to boost value for shareholders. Okay, now for the part where the rubber meets the road. This is maybe the most important question of all. We've seen that it's a quality company, no doubt. But what about the price? Is the stock a good buy today? And what are the risks we absolutely have to keep on our radar? And this really is the trillion-dollar question, isn't it? It's what every single investor is asking. When you look at a top-tier company that's growing this fast, you have to wonder, is all the good news already baked into the stock price? Or is there still room for it to climb? Well, to help us figure that out, we can use a handy little tool called the PEG ratio. It's pretty simple, really. Instead of just looking at a stock's price, it compares the price to how fast the company is expected to grow its earnings. Basically, it helps us answer the question, am I paying a fair price for all that future growth? So for Microsoft, the PEG ratio is sitting right around 1.3. Now, as a general rule of thumb, anything under 1.5 for a great growth company is considered pretty reasonable. So what this number is telling us is that even after its big run-up, the stock price doesn't seem totally out of whack. The market doesn't seem to be overpaying for that 15 to 25% growth they're expecting. The valuation, it seems, is justified. But of course, no investment is a sure thing, right? We have to be realistic about the potential roadblocks. I mean, building the future of AI costs a fortune, and all that spending could squeeze their profits for a bit. And let's not forget, the competition in cloud and AI is absolutely fierce. Plus, when you're one of the biggest companies on Earth, you're always going to have regulators looking over your shoulder. But even with those risks, you constantly hear analysts talk about Microsoft's wide economic moat. And this is such a key idea. Think of it like a castle. A moat protects the castle from invaders. For Microsoft, their moat is all the things that protect their profits. For example, it's super hard and expensive for a big company to just pack up and leave Azure. That's a high switching cost. Or think about Microsoft Teams. The more people use it, the more valuable it becomes. That's a network effect. This moat is what lets them fight off the competition and keep making great returns year after year. So, what's the final verdict? When you pull everything together, the case for Microsoft as a core long-term part of a portfolio is just incredibly strong. It really boils down to this. You get absolutely massive growth from AI in the cloud, you get reliable, growing shareholder returns, you get it at a valuation that seems pretty fair, and the whole thing is protected by that powerful, wide economic moat. So I'll just leave you with this one last thought to chew on. When you think about its position, right at the absolute center of the AI revolution and the whole digital shift in our economy, you really have to ask yourself, could Microsoft be the single most durable wealth compounding machine for the next decade? The evidence we've looked at today, well, it makes a pretty powerful argument.